Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX with today's European Session Outlook. We'll start with the North American markets. In Canada, we had the GDP annualized quarter-on-quarter 0.5% better than expected, and GDP month-on-month 0.3% better than expected at 0.5%. We also had the RBC Manufacturing PMI 1.4 points less than previous. In the US, we had Markit Manufacturing PMI 0.1 higher than previous. ISM Manufacturing PMI 1.5 weaker than expected at 51.1. The weakest ISM manufacturing report in 2 years is sure to give the Federal Reserve more to chew over as the central bank prepares to raise interest rates. We also had ISM prices paid 3.5 worse than expected, and construction spending month-on-month came out 0.1% better than expected. The overall impression from the past few months is that the construction sector overall is the strongest part of the economy, with spending up at a remarkable 26% annualized rate in the 3 months to July. The Dow Jones moved 30 points up, the Nasdaq 78 points up, and the Dixie is also up to 95.63 from 95.42. The biggest mover was USD JPY, 140 pips down. For today, we'll be waiting for the ADP employment change, the non-farm productivity, factory orders month-on-month, and in my opinion, one of the most important piece of news today is the Fed's Beige Book. Alright, on to the EU markets. In Germany, we had the Markit Manufacturing PMI 0.1 better than expected at 52.3. The unemployment change came out 5,000 better than expected, and the unemployment rate is at 6.4%, which was as expected. We also had rather the same news for the Eurozone, and namely the Markit Manufacturing PMI 0.1 worse than expected at 52.3, and unemployment rate at 0.2% better than expected at 10.9%. This is the lowest level in more than 3 years. Overall, the euro performed well yesterday, with the biggest mover versus the Canadian dollar 220 pips up. Today, we wait for the EU Producer Price Index data. In the UK, mortgage applications are better than expected and way better than previous. Better readings on the monthly and yearly money supply reports, and a slight decline in consumer credit for July. The Markit Manufacturing PMI for August came worse than expected and worse than previous. And we have some property market reports as Tier 3 in the agenda for today, as well as the construction PMI for August. The Euro GBP moved by 75 pips to the positive, while the move versus the Japanese yen was negative 30 pips. The sterling is in continuing 7-day negative trend versus the US dollar, adding another 7 points yesterday. Alright, Asian and Pacific markets. The Asian markets fell Tuesday, pressured by disappointing manufacturing data that fueled the concerns about growth in China and its neighboring economies. The Shanghai stock market will be closed Thursday and Friday as China commemorates the 70th anniversary of the end of World War II. The Nikkei 225 is with 1030 range, 960 points down yesterday. Australia's dollar strengthened after the Reserve Bank kept interest rates unchanged at a record low 2%. Traders are pricing in about 50-50 chance of another rate cut by November, as Australia, the developed world's most China-dependent economy, struggles to cope with slumping prices for key resource exports. Australia's economy expanded last quarter at half the pace forecast, only boosted by government and household spending, as a slowdown in the key trading partner China challenged exports. The gross domestic product quarter-on-quarter in Australia came out 0.2% down from 0.4%, and 0.9% previously. Year on year was 2% down from 2.2% and 2.5% previously. The Aussie versus the Japanese yen moved 220 pips down with 290 range. Tomorrow we'll see more data released about the imports, the exports, and the trade balance of Australia, so that's going to be important. In commodities, we had the oil prices retreated after data from industry group, the American Petroleum Institute on Tuesday showed that US crude stocks surged by 7.6 million barrels to 456.9. Despite the losses in oil prices, Iran will continue its policy to raise the output after sanctions are lifted. Putin is having second thoughts about the planned pipeline to China, as the slowdown there is worrying him. And gold prices eased in Asia on Wednesday with little regional data on the day, and the focus sharpening on the Federal Reserve and the end of the week US non-farm payrolls. Gold had a range of $13, ended on the positive side, trading at $1,140 now. Silver had a range of 15 cents at $14.56 now. Crude had $5 range, ended on the negative side at $44.47 now. Natural gas is trading at $2.68 at the moment with a range of 7 cents. Today we have the crude oil stocks change where we could be expecting a positive build. Alright everybody, thank you for the attention. This was today's outlook. I'll see you next time. Goodbye.